Welcome back to today's Morning Report on Thursday, the 14th of January, with me, Rich Perry, market analyst at Antec Markets. So moving on to dollar yen now, and this is potentially an interesting chart because the market is certainly trading far more negatively today with a safe haven bias. Now, the yen is not benefiting on the back of this. What does that mean? Well, it suggests to me that possibly there could be something in this in terms of the fact that the yen is no longer gaining. In the last few days, you can see here very mixed candles, very small bodies, very long tails, would suggest to you very much uncertainty in terms of how the market is positioned on the yen. You've seen this move down to 20 on the RSI, again similar to that August low. That spike low that we saw in August, 1646, 1668 was the low that we saw last Monday, on Monday. Is that the low? Well, it's a good question because we're seeing a bit of a turnaround in these momentum indicators. You've seen the stochastics turning up, for example. Now, we're not getting too carried away with this yet because I sort of started to talk about the prospect of a recovery yesterday as the early morning signs were positive. They were pushing higher, strongly higher. And then into the afternoon, you had a massive sell-off, and the yen closed with a doji candle, and pretty much just wiped out all the gains on the day. So we're seeing again today a bit of upside, but not too much. A bit choppy actually, isn't it, on that trading? But look at the hourly chart. You can see that sell-off is sort of turning into more of a ranging phase, isn't it? The momentum indicator is more rangy, between 30 and 70 on the RSI now. Having been previously going oversold, is now picking up a bit more. You've seen the support coming in around 1720 in the last few days actually. And now the moving averages are all flattening off as well. So this is becoming more of a range-bound trade, and the consolidation that we're seeing on this daily chart with these candles is also being reflected on the hourly chart as well. Now the big resistance to get through is 1875. That is the pivot from early January. Old low became new resistance time and time again. So that is obviously your big level of resistance. Near term, you've got a resistance around 1837, I think it is, the reaction high. So let's say 1840. And we need to break above that. And at the moment, we're sort of buzzing around in a bit of a ranging phase. But is this in the beginnings of possibility of a turnaround in dollar yen? It is loosely possible at the moment because these candles aren't really showing too much. But it stopped falling, and that is interesting in itself. So I wish you good luck in your trading, and I'll speak to you later. Thank you.